Good morning, this is Jack from Charting the Market, and this is the pre-market webinar for the morning of Thursday, the 20th of August. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take some of what I'm doing and learn from it, transfer it to your own charts. I'm not here to show you trading signals. This is a video for paying subscribers at chartingthemarkets.substack.com. It's published on YouTube after a delay of 24 hours. I'm pretty good, mate. I've thrown my back out, which is a bit uncomfortable, but that's all right. I've got a hot water bottle at my back, and the heat is not actually so cripplingly bad that's actually a unworkable idea. So I've been lucky with the weather. All right, let's have a look at ES. Now, ES, we saw a decent rally yesterday. The buy signal made target, and we are continuing down. I did say there was a pretty good argument for actually making this head and shoulder target here, double top target here, and I'm still thinking there is a pretty good argument for making this double top target here. So we are seeing if we're going to do that today, but the buy signal is played out. But what I would say is the NQ one didn't make targets. I would say we are reaching a potential head and shoulder neckline here, but that is also a potential asymmetric double top support trend line. So we could break down from that, set up a lower target. On RTY, we never had a signal, no topping pattern breaking down at the moment, but we could have a potential double top. YM, I was wondering about the breakup over this resistance trend line yesterday. We made a lower low with some confidence here, so I'm just going to redraw that as the current declining resistance trend line. So if we have a flag resistance, that's where it is. No obvious reversal pattern on here. This still looks like a bull flag forming. In terms of DAX, we had a 6-minute buy signal fixed, and that hasn't failed yet. We do have a double top here, which I should probably mark in, but I haven't marked in yet because I don't particularly like it. ESDX, we've got a 6-minute buy signal fixed, and again, that hasn't failed yet. Nikkei, no current divergence. I'm wondering whether this is a flag setting up a retest of this low, although bigger picture, we've got a retest for the all-time high booked as well. All right, let's have a look at the bigger picture charts. And ES, one reason I'm leaning lower is that we've still got a daily RSI 5 sell signal fixed on ES, and we've got one on SPX, and we've got one on the Qs. So this is giving more weight to the downside. We don't necessarily have to make it, but I have to say these signals tend to be pretty good ones. So we shall see. And actually, on this chart here, if we look back, this is probably the best one. If we look back here, we've got some failures here. This one here failed. This one here failed. This one here failed. But another 10 or 11 or 12 made target. So I tend to take these. I reckon these are my best relatively modest retracement sell signals. So we will see how that goes. So I'm leaning towards seeing maybe a rally to start off today and then more downside. We shall see. Where is the obvious target for that downside? Well, see this area here, 75.81, 62, 76.20. That double top is a pretty good match with that range, and I really like that range. We've also got the daily middle band in the 76.19 area yesterday, so I'm thinking backtest daily middle band, possibly get us. Well, I don't think we'll reach the 50 DMA probably. That's in the 75.27 area, but basically getting down to the daily middle band, giving it possibly a fairly hard test, making that double top target, and then we see where we are. That should make the sell signals on both SPX and Qs, assuming that Qs joins in again on the downside, which it did the other day. So I'm liking the downside there. In terms of Dia, this still looks like a flag. We're pretty close to a test of the daily middle band, and if we go below the daily middle band, I've got a very nice looking short-term support trend line here, which is in about the 525 area. Looking at the hourly charts and 15-minute charts on here, not an awful lot to see in terms of positive divergence. All the sell signals that we had initially have made target. So that's the NDX. We've got a little positive divergence here. It's not an awful lot, but we could buy signal here on the hourly. We will see how it goes, and a bigger 15-minute buy signal. So I am wondering if we might see it let off a little bullish energy to start off with today, but I'm expecting it to likely come down afterwards. Looking at Dia, not a lot to see on the hourly chart, and really not much to see on the 15-minute chart either. All right, let's have a look at IWM. And IWM, we've got nice little move down so far, not really looking like it's stopping, but I am wondering about a backtest of the daily middle band at 298. We do have a bigger picture potential level top, of course. Looking at which looks pretty good on the 15-minute chart. But I'm not seeing any evidence to suggest that would be breaking down now. Nothing really on the 15-minute. Nothing on the hourly chart where the RSI 14 sell signal has already made the possible near miss target. In terms of the daily chart, we actually had a possible daily RSI 5 sell signal brewing here, but we lost divergence just before the top. Otherwise, we would have had 3. But I'm liking the 2 we've got on SPX and QQQ. In terms of DAX, we've seen a bit of a retracement, wondering about a daily middle band retest, and we are through, or at least trying to get through, the daily middle band retest on Nikkei, and I'm wondering about a potential retest of this low, although that could not be the second low of a double bottom. It would be too large. All right, great. Let's have a look at DX. Now, DX, on that Beston's announcement yesterday, we had a sizable move down. Now, this wasn't altogether a surprise, and I have to say, it's something I was looking at on Sunday, I think, on the bigger picture chart, was I was talking about the possibility that this might be, all of this move up from the January low in 2026 might be a bear flag on the US dollar, which could break down starting to break down with a target at a retest of this low here at 95.55, at which point we'd have another inflection point, and this could either be a larger double bottom, or we could continue down. With helpful comments like the one from Vance the other day saying he didn't like the fact that the US dollar was the reserve currency because it allowed Americans to buy too much. That kind of thing, if it becomes stated policy, can actually send this down a long way. So looking at the other currencies, USD, we've got a 6-minute sell signal fixed, we've got a 6-minute buy signal fixed on DX, of course, GBP USD, possible 6-minute sell signal brewing, buy signal fixed on USD JPY, buy signal brewing and trying to fix at the moment on USD CAD. Sell signal fixed on Australian dollar, sell signal fixed on NZUSD. We're seeing an awful lot here, which is suggesting that we're about to see a rally in US dollar, but I'm leaning towards that being a rally and probably continuation down afterwards. In terms of ZB, we had a spike up on the best of news yesterday, but in all honesty, it's not really enough to move the needle. $4 billion a day of generating more short-term bonds and buying back more long-term bonds. It's just a continuation of a policy they've been doing for a while, from the start of 26, I think. From the start of 25, rather, I think. They have been letting their long-term bonds expire and not issuing new long-term bonds in the expectation that rates would go down. Personally, I don't think that expectation is in any way realistic. So what they're doing is basically they're just doubling down on this already failing policy to try and manage the bigger bonds interest rates lower. But the fact is they're not going. The reason that the yields are going up, in my view, is because government borrowing in the US is out of control. The deficit is out of control. And there doesn't seem to be any realistic plan to change that. And listening to Trump talking last night, his plan to change that seems to be to reduce interest rates to close to zero, because that would fix everything. It wouldn't, of course. And of course, inflation is rising at the moment. What it would probably deliver is just much higher inflation. So I don't think anything the administration is doing is realistic. We've pretty much retraced that spike yesterday, and we're on a 60-minute sell signal. That's now reaching the possible near miss target, but I'm not seeing anything. This is probably actually going to really move the needle and interrupt this downtrend. In terms of ZN, barely noticed it on ZN anyway, which you'd expect. All right, looking at oil. I was delighted to see that we've gone up high enough that these weak sell signals on we actually had a weak sell signal Brent, which failed overnight, on CL, which failed overnight, on HO, which failed the day before yesterday, and on RBOB, which actually strangely managed to make target. But we've now got no hourly sell signals, which is the way I would prefer it, and it's continuing higher. It's pretty close to a retest of this high here, but I'm thinking the target may well actually be, well, I showed the other day, I've got head and shoulder patterns. I'm watching out for potential flags here and and for resistance trend lines to form, but really I'm leaning higher. And arguably here we've got IHSs which have broken up with the target at a retest of these highs, but these highs are on the spot chart, not the futures chart, and could take us significantly higher. We will see how those develop, but I wouldn't be surprised to see these retested. And as you can see, we're now well above. This was basically the Besant drop when he was saying, deal is very close and all this sort of stuff. And we had a 10 buck decline. I'm sure lots of the president's friends did very well on that, but it didn't actually amount to anything. So we've reversed that now, and I think there's a pretty good chance we're going to head back up and retest this high and potentially go higher. The war is not in a good situation. The current Trump plan of economic war on Iran, well, you never know. But basically, the strait is closed. It's staying closed. There is no plan to unclose it at the moment. So the natural direction for oil prices is up. Looking at WTIC, I'm wondering about a retest of that high too, but that high would be here because that was the late July high. So that high would be up here at 93.81. We're still about $4 short of that on WTIC. And on Brent, we are about $7 short of it. So we will see how that develops. All right, let's have a look at the gold chart. Now, gold, we had a bit of a boost yesterday on the Besant News. Wasn't as convincing as anything. Well, I mean, the one which really broke out was crypto. So have a look at that video. But here we have broken up from the double bottom. We have consolidated. We have gone higher. Natural direction is up. And here, I think the problem with the reason for the differing reactions to this Besant announcement are that I think ZB is in a strong downtrend, which he's trying to interrupt. And I don't think it's got the power to do that. Gold, I think, was waiting at the door to go up. So I think this has given it a bit of a push through the door, and I think it's probably going to continue higher, but we will see. No current negative divergence at the moment. SI has gone higher. No negative divergence at the moment. Palladium did not go higher, and I have mentioned that this is a worryingly nice-looking bear flag megaphone. So I am wondering if that might deliver, and I think it might be significant that we didn't make a higher high in this double bottom that's broken up yesterday. In terms of platinum, you can see the inverse head and shoulder neckline I've got drawn in. I am wondering about a right shoulder pullback for this. Doesn't necessarily have to be here, but I've got to say this would be the obvious area. HG, I've got this basically is a potential double top, and I'm wondering about, and this actually would be larger double top support. I'm wondering about this going lower. Wouldn't be astounded to see a retest of the high first, though. In terms of KC, still on our way back to, I've lost all my trend lines, but still on the way back to retesting this high, I think, on sugar. 60-minute sell signal is fixed, not really been delivering much of a reversal so far. CC, I'm still expecting to see a retest. The next big target should be a retest of this high here. In terms of lumber, I think we are rallying. We've now made buy signals now made the possible near miss target, and I'm thinking I'd be watching support in about the 540 area on the next move down. On CT, continuing higher, no current negative divergence. Wheat, we've now made the double bottom target in the 703 to 704 area. I'm wondering about a retest of this high here. On corn, we have gone higher and made the target on the double bottom as well. And it's not stopped at the retest. And soy, we made the little double bottom target, and I think we're heading towards the retest here. I'm thinking food may well be doing pretty well over the next few months. mainly because fertilizer has been short and expensive over the last few months, and that takes a while and it feeds through the system. On ZL, still thinking the next big target is going to be a retest of this high here. Live cattle, we've got a potential larger double bottom here, but I'm really leaning towards a move towards the head and shoulder target in the 204.45 area. And HE still hasn't quite retested this low, and I'm still expecting it to. So we shall see how that goes. All right, great. Let's have a look at questions. Yeah, it will. Well, I mean, the thing is, I think on the bonds, they are normally you get because you are basically always redeeming and always issuing new long-term bonds. You get a situation where it takes a while for whatever the interest rate is currently for interest rate rises to feed into the system and actually into what the government's paying now. But what the government's been doing for the last year and a half or 2 years or whatever has been to delay. I think this is since investment came in. Has been to delay issuing new long-term bonds in the expectation that interest rates will go down, which they've spectacularly not done so far. So the more and more they do that, the more government bonds are weighted towards the shorter term ones, and the faster it takes for interest rate rises to feed through into the system. This is likely to this can really come back and bite them on the arse, because I've been talking about the possibility of a bonds crisis that could take interest rates up to 9%. That could add another six. I mean, within a year or two, that could add another sort of $600 or $800 billion dollars a year in interest. They're really playing with fire. This whole debt thing is playing with fire. So running their debts up this high is weakening the entire dollar reserve system. Although the administration has been pretty clear that they don't really particularly care about that. So we shall see. All right, great. In that case, I think it's a wrap. Everyone take care. I'll catch you guys tomorrow. All right, cheers.